Oracle's co-founder Larry Ellison is going to personally now guarantee more than $40 billion for his son's company in its effort to buy Warner Brothers Discovery. For where things could go from here in the saga, I want to bring in David Joyce. He's Seaport Research Partners senior media equity analyst. This news broke on our air yesterday. We talked to Jerry Cardinell about it all. David, when you start to think through what happens next, we did hear the Warner Brothers Discovery's board is going to take a look at this new amended offer. Is this a game changer?
I think it's still another step forward, not the game changer yet, but it addressed most of the board's concerns. I think the single biggest piece that still needs to move around and get pinned down is the value of the Discovery Global equity piece that would be on the Netflix side of the deal. There could be some tax implications with that. There's also the moving pieces on the debt. So it really, I think we need to get the new offer, the new financial offer from Paramount Skydance in order to really move this forward. But really, the board needs to address what came in yesterday. But I don't think yesterday's is going to get Paramount Skydance over the goal line.
So you look at Warner Brothers right now, we're at 28.76. In terms of your math, given the arbitrageurs that are playing this, what does that imply the ultimate takeout price is?
So at this level, it's already $1 more than the Netflix deal for the Warner Brothers studio and streamers. We think that the global network should be worth in the 3.5 to 4.5 range. So that means that Paramount, we think, would need to come in at 32 at least to make this more of an equitable offer. I think the moving.
God bless you, David, God bless you for thinking that linear TV has a future, as we all are here on linear TV right now. My question to you is, we talked to Jerry Cardinell yesterday from Paramount. He said he thinks the stub, which is what you're talking about, is worth a buck a share. He said, how could it be worth, a 6 times multiple to get into that, $3 or $4 a range, given the amount of debt that it has on it? And by the way, if you're right, I hope you have an even higher valuation on Versant.
Well, I don't have a 6 times multiple on Discovery. I have a 4 to 4.5 times multiple. The question is the amount of debt that's on there and the amount of debt that gets paid down in between now and the close with the cash flows from the linear streaming model. And that's and there's also the factor of how much EBITDA is applied to the Discovery side. When the Netflix deal was announced, there was less EBITDA applied to the Warner Brothers studio and streamer side than we expected. So we applied the difference over to the network side. So I think that how they allocate, the finance, the accounting, the SG&A expenses is also a factor here. So there's a number of moving pieces in that variable that I think could get you to the 3 to 4 range on Discovery Global. So that's where there's still some area of negotiation to take place.